Christina Brown here with the Brown team at Sage Door Realty, and I am talking everything bridge loans today. I don't know if y'all have heard of them, you know what they are, where they came from, what they're for. So there are many uses for a bridge loan. Well, what is a bridge loan? Let's talk about it. So first of all, bridge loans originated way back in like the UK from the 1960s. So these have been around for a really long time. A bridge loan is a short-term loan that has many names. You may have heard it called a gap loan, a swing loan, but it is a short-term loan typically used to help with financing when moving from one home to another. In a crazy market when the world can just move so fast in real estate and you want to sell your house to buy, but we don't want to make it contingent on selling a house to buy, but you really don't want to or can't carry two mortgages, a bridge loan may be a great option for you. But bridge loans are often secured by your current home as collateral, and then it will also allow sometimes to throw in other assets for collateral if needed. Basically, it helps you move from point A to point B without having to make it contingent on selling your home first. It allows you to use equity in your home to finance the funds needed for the next mortgage. But there's a lot of pros and cons and things to this to think about as well. The good thing about bridge loans is it allows you to move quickly. So for example, there's a home on the market, it has multiple offers. You don't have to hurry up and get yours on the market under contract, make it contingent, or make it sell first or whatever the case may be. You can get the money now and then you can worry about the details later in a sense. So you can get that cash quickly. It also can give you some payment flexibility. A lot of times when you have a bridge loan, you're not making monthly payments, or if you are, they are just interest-only payments, which is just such a smaller amount that's easy for most people to swing, rather than having, of course, two full mortgages. And then, of course, I already mentioned that you would alleviate the whole contingency thing, but they can also allow often for higher loan-to-value ratios and lower credit scores. So, not saying that's what you want. You'll obviously get better rates if those things are good. Plus, if you're looking to buy a house, you get a better mortgage if you're good in that department. But those are kinds of some of the basic pros with bridge loans. The cons with bridge loans are, number one, typically lenders won't do them unless you have at least 15 to 20% of equity in your home. So most often you need to have at least 15 to 20% in order to even consider a bridge loan. And then of course the financing requirements, a lot of times you might need to make extensions on the bridge loan, and a lot of times lenders don't want to do that. They won't extend bridge loans, or if they do, often they'll throw other requirements because that's going to cost them more money. That's a higher risk to them, and they don't want to lend money for free by extending, so they want that to come back to them in some way, shape, or form by making money off of that. And the only way really they can do that with a bridge loan by extending it is to say, hey, but we're going to require you now to get your next mortgage on your next home with us, which if you're happy with who you're using for your bridge loan, that may not be a big deal. And then of course it is a higher risk. Anytime it's a higher risk, it's a higher interest rate. So it can be as much as 1 to 2 points higher than your standard normal mortgage. So keep that in mind, but it is short term. It does help in other instances, especially if rates drop, market gets crazy, you need to sell and buy. A bridge loan may be a really great option for you. So just something to consider. Not saying that's what's best for you, I don't know, but the big thing is I say to people, if you're considering a bridge loan, you better be sure your home will sell, because they will require you to pay those funds back in a short-term period of time. So again, you want to definitely be dealing with a real estate agent, definitely find out what your home is worth. You got to figure out your equity, all that kind of stuff, but you also want to be sure, absolutely sure, that it's going to sell. That's really the basic thing. So for an example, just to kind of put it into better terms here, a bridge loan mortgage might involve cashing out equity from your current home, and then you're typically using that equity to put down as the down payment for the new property. That's typically what a bridge loan is used for in this process. So hope that gives you some help and some idea. Keep in mind, you need to shop for a lender that will do a bridge loan, because not all lenders will do a bridge loan. And get a realtor to come look at your house, tell you how hard or easy it will be to sell, how much it's going to sell for, so you can figure out how much equity you have, so that you even know if this is an option. But many people, this could be a great option for you. So hope it helps. Check out those bridge loans. Have a great day.